All right, everyone. We're live today with Mike Morawski. Mike is, thanks for joining us today. Mike Morawski is the founder and owner operator of My Core Intentions, a real estate investment coaching company. Many of you probably watched his webcast or webinars he does at LinkedIn Live. I've seen like thousands of people that attend these LinkedIn Live sessions, coaching people on how to invest in multifamily. He's a consultant, help people who are making the investments, and then an investment officer with Resilience Equity. Before we get started, remember everyone, we're listening. And we're talking about getting to hell yes. The premise of getting to hell yes has always been, let's try and find people who are looking to buy versus persuading people to buy our stuff. And Mike has done a great job at attracting a collection or a tribe of people that are following him and learning from him and your content and his content with respect to learning how to invest in multifamily. And of course, it's such a big curve right now from an investment perspective. So thrilled to have Mike today. Like always, we kick it off with the three questions, or the one question around, Mike, a little bit about yourself to frame the conversation, because everybody's got a story to tell, and a little bit how you got in this role, and what's the problem you solve for your customers.
Hey, thanks for having me on today. I appreciate it. And, everybody does have a story to tell, right? So, I'll start. I've been in the real estate space for 30 years. Started out on the residential side, selling residential real estate, had built a team. We were selling, about 125 houses a year, pretty consecutively for 12 to 15 years. Prior to that, my background was in the contracting business. I was a residential general contractor, building 25 room additions a year. Always had wanted to be in the apartment business, because when I was in that general contracting business, we had done a lot of work for a couple of large apartment syndicators in the Chicago market. And I always was intrigued by how to buy large apartment complexes. And so what I knew about it at that point was that you raise private capital from individuals, you marry it with a great real estate deal, you stay in the middle, and as long as everything goes well, everybody profits as a result of it. Well, 2005, I go out and I do my first apartment deal, and I'm really just kind of telling the high level of this for our sake today. But 2005, I go out and I syndicate my first apartment deal, and I think, wow, how I'm going to go raise some money. I have this deal under contract. I put it together. We're running the deal. And the next thing I know, 30 months later, I have $100 million company, because we went out, we bought 4,000 apartments in 5 markets and built a property management company managing about 7,500 units in those markets.
You're flying. You're on fire.
Listen, and that's what I thought too, right? I thought, man, I've got the world by the short hairs here at this point. But nobody saw, maybe people saw it coming. I didn't think we were going to get affected. 2008 rolls around, the residential market gets crushed. I was like, wow, dodged a bullet, because I think people are still going to need a place to live. But by 2010, that whole economic cycle caught up with us. And, I always tell people I've made 5 mistakes along the way. I grew way too fast. Nobody should go out and build $100 million company in 30 months, unless you have better systems in place, And so because we grew so fast and we were very unstable and we were over leveraged was the second problem. I owned $60 million worth of real estate at 85% loan to value, just brain damage. I don't know who was worse, us for doing it or banks for giving us the money.
Lending it to you.
Yeah. And then, didn't pay attention to the details. So asset management wasn't even a thing we thought about or talked about. Long story short, wound up being very unstable. Occupancies dropped, couldn't pay bills, couldn't pay investors. Had some deals that were operating well, some deals that were operating bad. Started to move money between companies to try and keep everybody afloat, because I didn't want my investors to get hurt. And I always tell people, I say, hey, I never flew private. I didn't have a big boat or a fancy house. I was the neighborhood baseball coach, home every night for dinner, trying to just build a business, and wound up being charged on wire fraud and mail fraud charges and got sentenced to 10 years in federal prison for the movement of money and non-disclosure to my investors. It's a really short version of the story, but those are really the highlights. So I always tell people, I say I went from this great success to loss, and then the redemption piece. And that's really where I try to live, is I try to live in the redemption. And I teach the people I work with in my coaching business to live in the resilient piece, right? We rebound. I think there's a lot of people that are hampered by their past history. Maybe they had a business failure, maybe they had an addiction, maybe they had abuse in their life, but they're stuck in a prison in their mind and they don't move forward. And I want people to realize, hey, don't stay stuck. You can move forward. Because I think life, as well as business, is such a mindset play, right? We have to have people in our corner and people in our life, and have the resilient attitude to bounce back. So while I was gone, I wrote 2 books. I wrote an ethics course. I wrote a paper that got published in the Business Journal of Ethics that gets taught at the collegiate level for forensic accounting classes. I taught real estate investing, property management, and ethics in prison for 6 years. I went to college. I got a bachelor's degree in theology, and came home, and I went in the coaching and training business. Thought that that's all I was going to do. Because when I went to prison, I thought, man, I just lost everything I ever tried to build or gain. And, I never thought I'd be back in the apartment business, but I am today. I got approved by the SEC to go back and be an issuer of securities and a
Sure. I mean, you're fiduciary of funds, right?
Yeah, right. 100%. So, I kind of do 2 things, right? I coach and train people. I teach people how to fish and find that first deal and then take it to closing. And our capital group winds up partnering with those individuals on their first deal. So I'm trying to get people to walk through that fear and help them to do more and be better at what they do and help them be successful.
Why is that your passion?
Well, like I said a minute ago, I think a lot of people are stuck.
Okay.
People are stuck, and mindset is such a big issue in what we do. People come from a place of fear that, what do they say? Public speaking is the biggest fear of people in general, right?
Right.
Somebody told me one time, the first time I ever spoke, just get out there and picture everybody in their underwear.
Yeah.
And when you take on a perspective that's fun and has some excitement to it, you can overcome those fears. So I try to make that easy for them. I try to make the process easier for people to get out of their comfort zone, challenge them. I hold them accountable to growth, because none of us grow professionally until we grow personally. And that's my philosophy around that, is we've got to grow personally.
Yeah, I would agree. I think, and the challenge with growing, it looks like a plant, right? If a plant stops growing, it's dying. And I try and take the approach that I need to grow every day. And a few years, maybe 2 years ago, I wrote this kind of piece where I was like, if I can just grow by 0.5% a day, what's that feel like? And just the straight line math, you end up at whatever 100x better by the end of the year. And so what does that feel like and look like? And I find that growth is an interesting concept, in that you follow Adam Grant. He talks a lot about your zones of comfort and then your zones of discomfort. And what you understand is that when you're in that zone of discomfort, that's when you're growing. And so you kind of like go through these curves of like efficiency and optimization, and then discomfort, and then optimization. And that J curve or that S curve, however you want to look at it, that is something that is like, that's growing up, that's development, that's getting better. And, you know, if you're lucky in your life, you get to a point that you're able to accumulate leverage around your knowledge and around your growth to share it with other people. And, you know, that's kind of the I don't know if every leader feels this way, but I certainly, the leaders that I follow along this path of, if I can grow and help other people grow, then that makes me grow. And it's a self-fulfilling engine, right? It just keeps it going, keeps itself going. And what's interesting from a transition point into getting to Hell Yes, you talk about your journey and your growth curve and the things that you learn. And I'm like you, I put things on paper, because if I don't, I lose track of all the moving parts in my mind. And so when I put it on paper, it forces me to structure everything and make sense of it all. And when you take a look at your business right now with the coaching program, I mean, the content that you deliver and you give away for free attracts people to come in and join your program, right? And you teach them how to liberate themselves from traditional investments and get into this wonderful world of real estate investing. You know, if compound interest is the sixth wonder of the world, leverage is the seventh wonder of the world, right? In terms of like how it can accumulate wealth. And then when you go out and talk to the market, people come to you looking to solve a problem. What's the problem that they're trying to solve?
I think a couple of times, a couple of different things, right? One is, first of all, how do I get started? Where do I start?
Mm-hmm.
And then the second one is the education around it. You know, I told you about that transition from residential real estate into the apartment business.
Mm-hmm.
Well, I spent 15 years in real estate. I thought it would be an easy transition. But, you know, the first time somebody said to me, cap rate, NOI, yield maintenance, that's not a language we speak on the residential side, right? So the whole language piece, just learning what the terminology meant or means, right? How do you incorporate your life around that? How does that start to become part of your knowledge base? So, you know, there's a knowledge component around the language, the anatomy of a syndication, things like that. How do you go buy a 200 unit or just a 20 unit apartment deal and, you know, syndicate it or joint venture on it? What does all that mean? And what's better suited? You know, how do we raise capital? How do we underwrite proficiently? You know,
how do you make money? I mean, and what part do you get paid on? Like understanding the cap stack, right? The GPs, the LPs, the promote, and where that all comes from and how you get paid. It's so important to understand.
Right. And, you know, I thought when I went into business, I thought I had a good conceptual idea of it. And that's all it was a conceptual idea. I didn't have the working fundamentals. And, you know, if I had it to do all over again, I'd have gotten a coach before I went and did that first.
Sure.
But, you know, and listen, I've been coached for 20 years by people, and I still have 2 coaches in my life today. So, you know, and if you look at some of the greatest athletes or entertainers, they, you know, Michael Jordan had 3 or 4 coaches, everything from physical to endurance to psychological to, you know, to health and nutrition. So, you know, I think we all need that in our life. So it goes back to what's your greatest fear and how do we help you overcome that, to what are you lacking in knowledge that we help you overcome that also.
So if I'm, you know, I've been following you online, I listen to you, and I kind of go, I'm eager to start investing. Maybe I want to pull the trigger on a 4 unit or maybe an 8 unit or a 16, whatever. And I reach out to you and I say, hey, Mike, I've been following along. You know, I've got my conventional investments, but I want to get in a real estate investment, and I want to do something. can you help me? Right? What have they usually tried before they come to you?
Well, usually, and that's an interesting question, because while you were talking, I'm thinking about two or three of my coaching clients that I have right now that I work with. One specifically was a chiropractor, right? Very successful chiropractic clinic in North Wisconsin. Owns a couple of different offices, has some doctors working for her, very successful entrepreneur, and does some residential fix and flips, and knows that business, but knows that it's not scalable.
Yeah.
You know, hey, listen, I've owned 200 single family houses. It's brain damage, and it's not scalable.
I owned one rental, and I owned it, and I was like, this is killing. I owned it for 20 years and did great on the exit, but man, I owned it and managed it, and it was, I mean, it's like the Christmas Eve phone call.
Right.
How can this happen every other year, right?
Yeah. So, you know, and they want to scale. They know that there's more money in more property, right?
Yeah.
In more units. And so, you know, I teach them how to go to that next level, or how to do their first deal, because of, you know, maybe some knowledge or some experience that they've had. Now it becomes a desire, and I help them feel that desire.
And one thing you brought up, in terms of like investing, right? There's the excitement about it. There's the desire about it. But to be successful, you've got to be thinking about how to de-risk it, right? De-risk the decision-making, de-risk the investment, de-risk all one way. If you're not de-risking, you're fooling yourself, right? So how do you help people? And the initial thing to de-risk is the emotional attachment to the way things, or the way you think things ought to be. And so how do you, as you're bringing people along, how are you different than the other, you know, there's other coaches in the world for real estate.
Sure.
How are you different than the other coaches in the world out there right now? And how do you help people come along?
Interesting question. So, one thing, I have two platforms. I have an inner circle platform. It's a group program. You know, we get on a group call, and, you know, there's some video, and I shouldn't say some video, 40 hours of video and documents and everything that goes with it. And for somebody who's a self-learner and they want to do that, great. But I have a partnership program. And my partnership program, I literally will hold your hand and walk you through the entire process, you know, and whether it's how to pick a market, how to build a buying strategy, you know, what do you say to people? How do you build those relationships that you need? Because this is a relationship business.
I know.
You know that from what you do, right? It's about relationships. And you and I already know, just from our conversation this morning, we're going to build a relationship.
That's right.
You know, but that's what this is. This is a relationship business. And so I teach people how to go build those strategic relationships and strategic alliances, and then how to look at deals with a conservative eye. Right? How to look at underwriting and build a business plan and an exit plan with a conservative eye, and to be able to take that conservativeness, go raise capital, and, you know, get deals closed.
Do you find that, like, the folks that come to you, they're looking for the last 10%, you know, of knowledge, or they're looking to de-risk an emotional concern? Maybe they've got a group of people, maybe they're a bunch of LPs, or they've got some buddies or whatever, but are they getting, because the concept of real estate is pretty mathematical, but the inefficiency that exists in real estate is why the relationships are so important.
Right.
Like, it is about location. It is about what, you know, all those things. And that's really inefficient. So do you find that people may conceptually understand they're at the 10-yard line, but they just can't get across the touchdown line?
Great analogy. So I get a handful of clients that are at the 10-yard line, right? One guy I can tell you about in particular, at the 10-yard line, trying to close his first 46 unit deal, just couldn't get it done. Started coaching with me 4 years ago, got that 10 unit deal done. Today he owns over 600 units.
Wow. Of one person, an individual, a single person.
Right. But he built a team, right? Yeah. One of the things we all need to do is build a strategic team. You can't go get that first multifamily on your own just because the bank's not going to loan you the money today on it. Now, if you have cash, you'll go buy it. But a bank, if you don't have experience or a team with you that has experience, you're not going to get it done.
But just because you have the cash, that's a quick way to lose your money.
Yeah, absolutely. Absolutely.
I mean, that's the whole point about real estate, is that you've got the equity element of it that's leverageable. If you're going to buy something straight out, I mean, there's better places to put your money.
Yeah. Right.
When your people are coming to you and they're looking to buy, and this is this hell yes thing, right? Who is your ideal hell yes buyer? Like, who do you market to?
So let me go back and finish answering that last question. So a handful of people come on the 10-yard line, but a handful of people come on the opposing 10-yard line, right?
Right.
So they come at the other end of the field where they don't have the experience, don't have the knowledge, but they have a little bit of desire. This is what I want to go do, right? That's the client base, are those two ends of the field.
Right.
And helping them, I get more satisfaction out of helping people get their first deal done. The chiropractor in northern Wisconsin, 8 months into coaching, just, bought her first 65 unit apartment deal.
Wow.
Right? Because we went through all the processes, we underwrote, 50 deals along the way. We looked at those deals. We played with them and said, so, I'm a big question asker too. What if rents don't go up? What if expenses get out of control? What if this, what if that? Because I want to poke holes in everything, even when it looks good. I'm in Madison, Wisconsin today, going to walk a deal with a coaching client who, on paper, it looks great. But let's see when we really start to poke some holes in it, how great it actually looks. So those are my actual, best clients, right? Are the ones who said, hell yes, I want to go do this. Let's go build this business. Hell yes, help me get this deal done and to go on to the next one.
It's interesting you said that you underwrote like 50 deals leading into that closed deal. What was the difference in those first 50 deals? Is it just like they didn't meet the filter? What happened? Like, what was, as an example, why did the first 50 not get across the finish line?
Yeah. So as a sponsor on deals and an operator, I don't want to bring a deal to the market unless I can achieve a high teens, 16, 17, 18% IRR annual return back to my investors.
Right.
And I want them to get some cash flow along the way, 6, 7, 8% a year on cash flow back. If I can't meet those two thresholds because the purchase price is too high, or I'm not going to get the rent growth, or, the expenses are too high and I'm not going to be able to get those expense numbers down. If I can't achieve it for my investors, because in the end, it's the investors that matter. Not the deal. It's not how many units I acquire. It's not how much money I make. It's the investor's return and preservation of their capital. So if I can't achieve keeping their capital safe and delivering a return, it's not a deal worth doing. So those first 49 deals we looked at all fell below the thresholds, and engineering them a different way doesn't help.
Do you find that, given that you're out there buying, where do you have a sweet spot, like in C to B to A, or value add, or buy and holds? Like, what's your in terms of like the way you go at the market, I mean, the easy answer is all of them. But like, if you had to pick 100 properties, but you could only pick 10 of them, what do you like to? Where do you feel the most comfortable in?
So what I really like is that B class market, right?
Mm-hmm.
So let's call it 1990s, late
Yep.
80s, and newer. However, a lot of that stuff.
Concrete construction. Do you
Yeah.
like elevators and no elevators? Like, what do you?
No elevators, garden style, market rate rent, 2 to 3 story walk ups, pitched roofs, specific markets. We monitor about 40 submarkets around the country, because we can find that product, because those markets make sense for 13 or 14 things that we check the boxes on to make sure the market makes sense, because we need to see the growth. And is the growth?
So you and I definitely should talk more, because we love that low density garden style market.
Yeah.
Because it's the assets are more robust physically. They have a higher maintenance. There's a maintenance element to it that is complicated because they're spread out, because they're more scattered.
Right. So here's one of the interesting things. What I really like doesn't pencil real well today. So you're going to look at more deals, right? But so we've been buying, 1970s vintage stuff that's a little bit more deferred maintenance, a lot of CapEx, bad owners. We bought some deals in Tulsa, Oklahoma last year from a slumlord that has just been an extraordinarily heavy lift. But, we're turning the corner and we're in phase 2. And phase 2, there's a whole bright new element for the investor looking for an opportunity today. So we'll finish our capital raise, we'll finish our CapEx plan, and now we have an asset that when we bring it back to the market, will achieve our ultimate end goal.
It's interesting. I was an LP in a building in Southern Ontario, and like as an LP, you don't get a lot of information, right? You get kind of your monthly statements, and you get monthly statements, but they don't often trend in the right direction. So I ended up being underwater on these things after a while because the taxes were going up so high. So I exited. But like what I found out in the process of trying to exit is that this building that was sold to us from an LP perspective, or the investment that was sold to us as an LP perspective, had fallen into disrepair. And so I didn't go in with the intention of being an LP in what would inevitably became a slumlord, kind of like whatever you want to call that. But like there was cockroach problems, there was pet mess everywhere. It was falling under disrepair. But we don't get that information as an LP who's 3,000 miles away, and it was really frustrating to see that investment go into disrepair as a non-op LP, and then try and exit. It was so hard.
Yeah.
So if you and what can LPs do in those situations?
Well, yeah, it's a big leap for the LP, right? Because generally there's a general partner team, and the general partner that are not the daily operating people should be stepping in and helping turn that around. And if they can't get it done, then the LPs would have to band together and try and take over the asset, and the operations of the asset. But it's a long road for the LP. And I don't want to discourage any LPs from investing, because like you talked about the learning curve, it's the same thing in real estate, the market cycles, right? And we're in the 4th quadrant right now of that market cycle. And I think we're entering the greatest time in history that there's going to be a bigger distribution of wealth. And a lot of it's going to come from real estate and multifamily real estate, more specifically, over the next 10 years. And I'm telling people today, as an LP, get involved in a deal.
Yes.
Get involved.
I didn't get involved in the deal. I was passive to the max. I was too busy to care, and it cost me money.
Yeah.
And I also agree with you in the multifamily curve. Like it's not too hard to look at other parts of the world and see how multifamily is the standard. Like single family is kind of an American invention. You go look at Europe, you go look at Asia, it's all multifamily.
Yeah.
We invented it.
Yeah.
And of course, there's cottages and there's all those things. But in terms of an urban residence, like the single family concept is a North American thing. You just don't see the sprawl in different environments. You don't see that in Madrid, in London, in Amsterdam, and it's all multifamily. Berlin.
Yeah, 100%.
And so the playbook's been written. It's just now to follow it, because now we're in a space now where even if you look at municipalities, I'm on a couple committees here talking about rentals and trying to get rentals, working with the city to get rentals kind of governed differently. And even the cities don't get, like, they're stuck in a problem where the city services, the tax structure, the tax base can't support the city services in a sprawling environment. It's just the math doesn't work out anymore, right? And so it has to come in a density. And then when you talk about density, there's certain formulas that work out, and multifamily is one of the ones that works out pretty good. Yeah. And so for all the people we have in the world that want to buy a house in North America or want to live in a place, and that are looking to live in a place, home seekers, they're going to have very reliable ways to live, and they're choosing to spend their money in different ways. Like, I'm a huge believer in the curve that we're feeling right now. I agree with you there.
Yeah.
When your people are looking for coaching, do they often have an urgency about, like, the ones on the 10-yard line, right? Is there an urgency about the coaching they're looking for? Like, are they all of a sudden hot to trot, or is it that they're looking to solve something that has been nagging them for a while? Like, what's their urgency like?
Well, I think if you're on the 10-yard line, you have a greater urgency than somebody who's on the opposing team's 10-yard line, right? So I think urgency, like anything else, is valued differently depending on what your desire is. Right? Sure. If you've got a burning desire to be in the multifamily business, your urgency is going to be greater than somebody whose desire is just, well, I think it might be a good idea, right? Here, I'll give you an example. When I first started investing in real estate, I answered, and I'm going to date myself a little bit here, but I answered a half-page ad in the back of the local newspaper that said, hey, come to this event. We're going to teach you how to buy real estate with no money down, creative financing, by one of the greatest real estate investors I think ever taught, was Robert Allen. And he, so I went to this thing, and because I got so excited at this 2-hour preview, I bought the weekend coaching program, and I went to that, and my urgency and my desire was so great by the time I left there that the next day, that was a Sunday, it was over. On Monday, I had my first 4-unit deal under contract, $1,000 down, and the owner held the paper on the rest. Wow. So, but my urgency was greater, right?
Yeah.
I could have went to that thing and said, someday it might be a nice idea to try this, but I took it to the next level. I'm an action taker. So I like to work with people that are action takers.
Sure.
That are going to, I want to do this, and I'm going to take the action, and I'm going to let you hold me accountable to the action I take.
Do you ever get people that challenge you on price?
All the time. Everybody, that's probably the biggest objection any coach gets is, I can't afford it. I don't have the money, Yeah.
And what do they say? Like, what's their price objection?
So, I can't afford that right now, or it's not in my budget, or, I I spent a bunch of money on this or this coaching program. I get a lot of people that come to me after they've been in a coaching program and
Okay.
haven't learned anything. And they spent $30,000, $40,000, $50,000 on other coaching programs. Hey, here's a great story, right? I spent an hour on the phone with a guy one day. He goes, man, I've learned more in this hour from you than I learned in the last 8 months in this program I spent $50,000 for. So, I don't charge those kind of fees.
Yeah.
Because I'm a believer that if you've got $40,000 or $30,000, you should put some in a passive investment and learn from that side, and spend some on coaching and learn from that side.
Mm-hmm.
So, I try to work with people. I don't want to kill people, but I want people to be successful if they want it. But listen, if you walked out of your house right now or your office and the tires on your car were flat and you didn't have any money, you'd figure out how to put 4 new tires on your car.
Right. That's urgency.
Yeah. Right.
Right. The whole era of sell me this pen is over. I mean, I think it's over, but the era of like, I need to buy a pen is not over.
Right.
And so like the tires example, the pricing example, it's interesting to really think about the power the buyer has. And then as sellers, us responding to the buyer's needs. I mean, there's still an element of marketing, like you do your LinkedIn live shows, you create demand for how you're different and your message and the results. But effectively, that's more about creating awareness. Like, just thinking about this in real time. Like, conventional marketing is like, I need to create demand for this solution. Whatever it might be. But really what it is educating the market about the problem that they're dealing with and then how your solution fits. And that's a different perspective. Like I was working on a blog post the other day, and I know we're also redoing our website. And I was like, what if we were to use, and everything was kind of like conventional, right? I was like, what if we were to take everything and instead of having statements, what if we were to turn everything into a question? How would that change the way our tone of the website? How would that change the tone of this blog post? And the question being something that the reader would be asking for, right? Versus me talking. Right. And kind of mulled on that for a bit. And we're like, wow, if you frame it as a question, how can I buy real estate? How can I buy multifamily? That's different than I'll show you how to buy multifamily. I'll show you how to buy real estate. And like just that frame changes and it becomes more of you're on the same side of the table with people. You're more of a coach than you are a seller.
Right.
And that's part of this whole Getting Hell Yes journey, is trying to find or hear stories about people that are mobilizing to be on the same side of the table as the buyer. This is why I was so excited to chat with you, because like the coaching idea, it's knowledge. And depending on you can chat GPT a lot of the content that you teach.
Yeah.
Right.
Right.
But people don't, because it needs to be packaged. It needs to be oriented. There's got to be frameworks. You can, and that's what you end up wanting to get, because it's a little raw if it's just out of Google or a GPT. And that packaging of it all makes it valuable and easy to consume. And to your point, easy to execute.
Right.
Right. And that's what I find really exciting about your work, is that I hear it, and I'm not a coach, I'm not one of your coachees, but like the way that you message about real estate investing makes it available for everybody.
Yep.
And that's the thing that people feel is a glass wall or glass ceiling, that it's out of their reach. But your story, your personal story, and the story of everyone that you coach makes it available to everyone, right? I met a gal out of San Antonio, and she was in property management forever. And now she's trying to help like women buy real estate as a wealth accumulation kind of engine, right? Because that's her passion. is to help people who are maybe first generation immigrants learn about how wealth generation occurs through real estate and activate that, And so I find that, like, talking to yourself and talking to this gal, like there's something behind the coaching that's more than just the P&L. Like you said earlier, like letting people understand and seeing them being inspired by the liberty of being in control of your destiny and wealth is also inspiring. That's also cup filling,
Yeah.
Like, do you find that when you come out and people are looking to execute or to choose a coach, is there any consistent or rhythm to, they've attended so many sessions, they may have bought your book? Oh, actually, speaking of which, is the book new? You mentioned the book earlier. I have to read it.
Yeah. This is actually my third book, Multifamily Investment Secrets, Your Explosive Guide to Multifamily Investing. And here again, somebody could pick this up and go buy a multifamily and do the business as a result of this, right? But are they going to? Most people won't even go buy this. They could go right now and download this for $4, right? But will they take action on that?
Yeah.
And I encourage people to take action. That's why coaching, I think, is so important. For my partnership program and to hold hands with somebody, they'll make 4 times that on the first deal that they do.
Yeah.
4 times.
I find coaching is an interesting story. There's one of my most favorite coaching stories goes back to Roger Bannister, the guy that broke the 4-minute mile, right? And the story behind his coaching was leading up to him breaking the 4-minute mile. There was an Australian runner, I think, who had come close, a number of times. And they had kind of come to the conclusion that breaking the 4-minute mile was beyond the human condition. Like, humans just can't run that fast. And then one rainy day in May, at a college in England, Roger Bannister's coach says to him, I think today's the day. I think you can do it. And Bannister said, no, I can't do it. It's not possible. It's not beyond the human condition. And then his coach said, well, let's just go and I'm oversimplifying the conversation, but, gave him the inspiration, the belief that he could do it. And I think somewhere along the line, the coach even tricked him. Like, he told him he was running slower than he really was. And he blasted through the 4-minute mile because of the coaching. And the coaching, the accountability that happens from coaching, because I can go read your book. It doesn't mean anything. I'm going to do anything about it. But if I've got to tell you that I read the book and I committed to you to do something and I don't do it, then there's an admission on my behalf that I'm not executing. And that's the thing that makes a big difference.
Yeah. That's my philosophy. I love that because, like I said, I've been coached for 20 years. And the only reason my business grew year after year as a result of coaching was because I never wanted to go back to my coach and say, I didn't get this done.
Yeah.
Me too. Accountability, right?
It's an incredible thing. It's an incredible thing. I want to kind of aim towards the finish line here a little bit.
Sure.
You've got folks that are out there selling, and you've been coaching, and you've got your 3 different businesses, and you've if you take the idea that selling is helping people commit to change, right? Being accountable, achieving their goals. What's the one piece of advice you'd give people who are out there trying to sell, trying to get people to commit to change, and trying to get their buyers to hit hell yes?
To the coach?
What would you, if you were coaching anybody, like I want to start a franchise business, I want to start a lumber yard, whatever, and they're trying to find customers that are seeking, that they need help trying to find customers that are seeking to buy. Given your experience and the hundreds of people, thousands of people you've helped, what advice would you give those people?
Get really clear on your why. Get really clear. And not just, I think when a lot of people really start to tap into their why, well, I'd like to have more money, or I'd like to spend more time with your family, right? But ask why. Why is that important? Why is that important? Go 5, 6, 7 levels deep with why, because there you're going to find your deepest why. And the deeper our why is, the more incentivized we become. And that's where we show up on not the 10-yard line, but the 5-yard line, right?
Right.
The desire is so much greater than when you have that deep why. And so I would say tap into your why as deep as you can, because there you'll find out either it's really not that important or it really is important.
Very interesting. Can you share your why?
My why? I think that my greatest why today, and I have a couple different ones, but my greatest why today is I don't want other people to be stuck. And my example of not staying stuck and being resilient is the greatest example and legacy that I can leave.
I love it. That's outstanding. That is also inspiring, because then people can reach their potential.
Yeah.
Outstanding. How can people get a hold of you?
Great question. First of all, if you want the book, you can go download the book at multifamilyinvestmentsecrets.com. And if you get the book, you can reach me through there as well. So listen, you buy the book for under $5 and there's $1,000 worth of free gifts. So go buy the book, will you take action is the next question though. You can reach me at MikeMorawski.com. That's my website, or you send me an email there, Mike@MikeMorawski.com. I love to connect with people, and anywhere you are on social media, Instagram, Facebook, LinkedIn, Twitter, somebody even, hey, I got on an airplane the other day and some guy was walking past me and goes, I know you from somewhere. I just looked at him. I went, YouTube. He goes, that's where I know you from.
There you go. And when's your next LinkedIn live show? Your next.
Yeah, we took a pause on our Thursday morning. Yeah. We're now going to be doing a Wednesday deal, which is starting in April. So by mid-April, we'll be back up and running on LinkedIn Live Wednesdays, exploring some different entrepreneurial things and multifamily a little deeper. So
outstanding. Who should we talk to next on the show? Any ideas?
On the show, and do you want to talk to somebody from a perspective of a coach or business owner?
Somebody who's in property management. Either they sell to property management or they're property managers themselves. Maybe they're owners. Somebody in that space.
I have a great guy for you. His name is David Berth.
Okay.
He's with a company called AFI. I'll make sure I make that connection for you.
I'd appreciate that. Outstanding. Thanks everyone for listening today. Mike, this is I appreciate you being super vulnerable and just genuine with the conversation. I hope everyone had a really good, listen and took away some lessons there. I really, it's funny. We had Mindy Price on 2 days ago and her consulting practice, but inside the why. And so we talked a lot about that. And finding your why is something that when you have your why, it's less effort.
Yeah.
It is just less work, and you're not toiling away, exchanging time for money. You're doing it because of purpose. And it's much easier to do that as a human being than it is, to work to work for money.
Yeah.
Thank you for that. And for everyone listening today, remember, if you're listening on LinkedIn Live, we're also on Spotify and Apple Podcasts. Please follow and subscribe and download. Those are always good for the show. Add any comments to LinkedIn Live. We'll catch them even if they're later on and not live. Really appreciate that kind of engagement. If you've got any questions to Mike, you can put it on the LinkedIn Live here, or obviously through Mike directly on LinkedIn. Thanks everyone for listening today. Mike, thank you so much for sharing today. What an incredible story. It's so compelling. And I get, what I'd leave with everyone is, have a bias for action, right?
Yeah, absolutely. Thanks for having me on. I appreciate it. And it's been a lot of fun. And I hope that everybody got something out of it. So
I do as well. All right. Thank you, everyone. Take care. Have a great day.
Bye.
And we end the stream. All right.